Hello, everybody. Let's get started right away. Sorry for the late start. Jones is up 1.5%, Nasdaq up 2%, S&P 500 up 1.5%, Russell 2000 up 2.5%. All stocks are up. All sectors are up except for healthcare. Utilities are mixed, and consumer defense stocks. So it's a risk-on type of day. Yield curve is up quite a bit today, about 10 basis points across the curve. 5-year Treasury is up 11 basis points. 10-year up 8. 30 years up 5 basis points. And then the 2-year yield is up 10 basis points as well to 390. I think the stock market's come to terms with the fact that, with the likelihood that the Fed isn't going to be cutting rates in the next couple of months here, unless there's a liquidity event. Initial weekly claims came in a little lower than expected at 228,000 versus the prior 241,000. I think there were some issues around layoffs in New York State about spring break, I guess. So that's normalized a little bit. Continuing claims are now at 1.88 million, lower than the 1.91 million last week. Q1 productivity and unit labor costs preliminary figures were just announced. I think this is a little bit noisy because of what happened in Q1 with imports. Productivity is lower in Q1 by 0.8%, even lower than the expected negative 0.4%, and much lower than the prior 1.7%. There's going to be a lot of noise. And because of that, unit labor costs in Q1 jumped 5.7% versus the expected 4.0%. Wholesale inventories came in a little lower than expected at 0.4% growth in March versus the expected 0.5%. And the oil prices are up by 3% to $60 per barrel. Let's read the article of the day. Any questions, comments, please request to speak. Just a quick note on productivity. Let's read a quick note on productivity before this article. If you have any audio quality issues, let me know in the comments. So non-farm business product output was lower by 0.3%. Hours worked was higher by 0.6%, therefore lower productivity by 0.8%, and higher unit labor costs 5.7%. Hourly compensation increased by 4.8%. And this again goes towards stagflation rhetoric. But like I said, this data point is very noisy due to imports. We'll see what happens in the other end of the storm. Now, what I can say is, so this is for Q1 data, right? Lots of imports in March and April, but May, especially in the automotive business, May, I'm already seeing some slowdown in orders, in interest, in buying cars. I think we still don't know the magnitude of front running these tariffs, and there's going to be some more of that with the 90-day deadline coming up. So I guess that would be kind of June, but May seems weak. May seems weak, and we saw a UK deal today. We're going to go into that. I think the base 10% tariff stayed, but I can't confirm that. Let me just look into it a little bit more. So this front running, I think, may be a bit more than people realize. So in the other end of this storm, I don't think the consumer will be as strong as market bulls think, but we'll see. We'll see. I also see some more indications of discretionary spending declining as well. So I honestly don't know where this bull market or the market surge is coming from today. It seems unwarranted to me, but maybe I'm wrong. I guess we'll find out. Wall Street rises after US Britain trade deal boosts market confidence. So there you go. That's the Reuters explanation of why the stock market is up today. Wall Street's main indices climbed more than 1% each on Thursday as investors assessed a new trade agreement between the US and Britain, the first such trade deal the US has signed after President Trump paused tariffs last month. Britain agreed to lower its tariffs to 1.8% from 5.1% and provide greater access to US goods as part of the deal, while a 10% baseline tariff on goods imported from the UK into the US remains in place. Now, just a quick note on this. Last night, I think Trump said that this was a big country, well-respected country, etc. Then the news came out this morning that it was Britain, and I don't think Britain is one of the primary trade partners of the U.S. I think most of our trade is done with Canada, Mexico, and China. So I'm not sure how much this means, but I think it's important to kind of note that the 10% baseline tariff on goods imported from the UK into US remains in place is important. Right? So we can probably expect that to be the case. As we have expected, our base case, I think these 10% baseline tariffs are going to stay because Trump needs this money to pass his tax cuts. So we'll see if that applies to China and other parts of the world as well in the future. Airline stocks jumped after US-UK agreement exempted plane parts made by Rolls-Royce from tariffs, with the S&P passenger airline index up 5%. Rolls-Royce is not the car company, it's the engine. US Commerce Secretary Howard Lutnick said the UK would buy $10 billion of Boeing aircraft, sending the plane maker shares up 3.5%. Trump said he expects substantive negotiations between the US and Beijing on the trade front this weekend. He also said tariffs on Chinese imports could not get higher than 145%, which is essentially an embargo anyway. So we have an unbelievable among 50 reported questions to Trump. Nobody asked about yesterday's biggest rumor regarding AI diffusion rule repeal. I don't think that's as big of it. So JR comments on YouTube. He says, unbelievable among 50 reported questions to Trump. Nobody asked about yesterday's biggest rumor regarding AI diffusion rule repeal. I don't think that's as big as a deal that people think. I don't think NVIDIA or AMD selling into the China market or other parts of the world, limiting to this chip or that chip is that big of a deal. I think NVIDIA's issue is going to be demand. Demand growth is slowing rapidly. Revenue growth rate is declining. Margins are declining. And that's the real problem. I don't think regulatory is the problem for NVIDIA. I don't think regulatory is the problem for Tesla robotaxis. I think for NVIDIA, it's going to be the demand for GPUs. And for Tesla, it's going to be the rate of progress and adoption rate. Okay, let's continue with the article. This is what the market has been looking for, some sort of a breakthrough. This does not put to rest some of the uncertainties regarding the trade war effects, but it's a start, said Peter Cardillo, chief market economist at Spartan Capital Securities. Energy stocks led gains among the S&P 500's 11th sector with a 2.4% rise, tracking a jump in crude prices. I mean, I don't think this is a jump. The crude prices are still below $60 per barrel. So I don't think these prices are sustainable, though. So to the extent that people think this is going to help inflation, I think they will be surprised. The domestically focused Russell 2000 small cap index added 2% and touched a more than 1 month high. Most mega cap and growth stocks were higher, with Tesla leading gains with a 4.7% rise. So Tesla is still trading in the range that I thought it would this week, 280 to 300. Hasn't broken above 300 so far, but I think this will kind of exhausting this bounce. But I guess we'll see. Semiconductor stocks inch 1.9% higher, building on the previous session's gains after a spokesperson said the Trump administration was planning to rescind and modify a rule that curbed the export of sophisticated AI chips. The U.S. Federal Reserve held interest rates steady. So we're going to go into that. We're going to click into that in a second. Let me just finish this article. The U.S. Fed Reserve held interest rates steady on Wednesday and flagged heightened risks on inflation and unemployment, further clouding the economic outlook for the world's largest economy. Yeah, so I think It was 99% as expected yesterday. I think that what the markets did not expect is that the Fed pointed to both risks rising. So essentially throwing its hat onto the stagflation camp. And um, and I think Powell also signaled a no cut in June, which now the market switched to agreeing with that. And I think the risk is that the inflation will rise. Uh, and there's talks out there from analyst notes saying that inflation will have a four handle by the end of this year, and that's very problematic for the Fed. Traders now see a rate cut only by September, and are pricing a total of 73 base points of lowering by 2025 end, according to data compiled by LSEG. On the data front, jobless claims fell more than expected last week, suggesting the labor market continued to chug along. The weekly data is very noisy, but the 4-week average is rising. Among others, US listed shares of ARM plunged 4.8% after the chipmaker forecast first quarter revenue and profit below Wall Street estimates. There you go. Let's dig into that a little bit more. Tapestry added 4% after luxury group raised its annual forecast, while Fortinet slumped 8% after the cybersecurity firm's second quarter revenue forecast came in below estimates. Warner Brothers Discovery gained 5% after a report said the company was headed for a split. The streaming firm missed its quarterly revenue estimates. Krispy Kreme's shares sank more than 24% after the restaurant chain became the latest to withdraw its full year forecast. Interesting. Let's see. Donut stock down 20. Wow, this is crazy. In the last 5 years, Krispy Kreme is down 84%. In the last 1 year, down 75%. So looks like they're headed to bankruptcy. It's a $500 million company. It was a multi-billion-dollar company. Obviously, it was 10x worth, so $5 billion. Yeah, looks like they're headed to bankruptcy. All right. Okay, that's it on the general view. Let's look into Trump administration's resigning of this rule. Let me see if there's any comments on YouTube. JR says, we don't even know if it's stricter or less strict. Definitely a valid question. Yeah. May 7th. Trump administration plans to resign and modify a Biden-era rule that curbed the export of sophisticated AI chips, a spokeswoman for the Department of Commerce said on Wednesday. The regulation was aimed at further restricting AI chip and technology exports, dividing up the world to keep advanced computing power in the US and among its allies while finding more ways to block China's access. The framework for AI diffusion was issued in January, a week before the end of the administration of former President Biden. It capped a 4-year effort by the Biden administration to hobble China's access to advanced chips that could enhance its military capabilities and to maintain US leadership in AI. The Biden AI rule is overly complex, overly bureaucratic, and would stymie American innovation, the Commerce spokeswoman said. By the way, I was listening to the Senate committee hearings today, and AMD's CEO said the same things. Overly complex. The new rules need to be simple and enforceable, easy to follow, understand. We will be replacing them with a much simpler rule that unleashes American innovation and ensures American AI dominance. Last week, Reuters reported the Trump administration was working on changes to the rule that would limit global access to AI chips, including possibly doing away with it splitting the world into tiers that help determine how many advanced semiconductors a country can obtain. According to Commerce spokeswoman, officials didn't like the tiered system and said the rules was unenforceable. The spokeswoman did not have a timetable for the new rule. She said debate was still underway on the best course of action. The Biden rule was set to take effect on May 15. Shares of NVIDIA, an AI chip designer whose sales could rise if the rule were changed to increase exports, ended 3% higher after the news came out on Wednesday, but then dipped 0.7% after hours trade. The Biden rule divided the world into three tiers. I don't care what it did because being rescinded. Um, but Trump administration officials were weighing, discarding the tiered approach, etc. Replacing with a global licensing regime with government-to-government agreements, sources told Reuters last week. Okay. I don't think this matters that much. I think the issue is going to be demand. There is quite a few signs that data center growth is decelerating and that there's going to be some um, unused capacity, I think, 2 years from today, 3 years from today. Just like we're seeing with Tesla. Tesla margins surged, growth rates surged, prices surged in 2022. And today, capacity utilization is the lowest it's been in Tesla's history. And I think the same is going to happen with these AI data centers. ARM shares dropped 11% as chip provider forecasts lower sales, declines to give full year guidance. JR ads on YouTube real quick. NVIDIA newsroom, gold badge account, quote tweeted this news. Don't know if that strengthens the rumor or not. Yes, I saw that too. But I mean, I learned a lesson not to take management. I mean, what else are they going to say? You know, so let's read the ARM news. ARM shares drop 11% as chip provider forecasts lower sales, declines to give full year guidance. Shares in ARM Holdings fell 11% on Wednesday after the chip provider gave a fiscal first quarter forecast below Wall Street estimates and declined to give guidance for the full year, citing global trade and economic uncertainty. Yeah, that's pretty important. That's a big deal. So ARM shares are down 5%. The stock is up 38% in the last month after Trump dip, after they bottomed. 38%, down 20% in the last 6 months. And I think headed lower. This is one of the companies that really benefited from AI hype. P ratio of 155, market cap of 125 billion. Yeah, so let's dig into this. I might write an article about this company. So let me take a quick note. I also need to do AMD, ARM, AMD. I'll do an NVIDIA preview. And then we're going to do Tesla. All right. All right. Oh, and SMCI. Okay. Let's see. ARM's fourth quarter revenue slightly beat analyst estimates, but it joined companies across the board in providing a cautious quarterly forecast. Sweeping global tariffs announced by the Trump administration and tighter US curves on the export of advanced semiconductors to key chip markets, China, have clouded the outlook for semiconductor firms. Okay, so there's nothing new so far. Given the uncertainty of global trade and economic picture, we have lower visibility than is traditional to start the year. As a result, we do not consider it prudent to issue full year guidance, CFO said. Okay. Similar warnings, including Samsung and Qualcomm. Okay. The company has given annual sales guidance in the past years, but CEO said ARM's increasing share of revenue from per chip royalty payments, which are in turn tied to sales of devices such as smartphones and laptops, has made its business harder to predict. Okay. The company forecasts first quarter revenue of 1 billion to 1.1 billion, with a midpoint below analyst estimate of 1.1 billion. ARM expects adjusted profit of 30 to 38 cents per share for the first quarter, compared with estimates of 42 cents per share. Yeah. Um, CEO told Reuters the below expectations guidance is due to a large licensing deal that may not close during the fiscal first quarter. Royalty revenue growth will be between 25 to 30% in the first fiscal first quarter, higher than the previous quarter, he said. Okay. Why are we guiding slightly below consensus? It's really down to licensing, Haas said. We just want to be prudent relative to some large deals that we have visibility on. Haas said tariffs had little impact on ARM's business so far. We don't really know what that's going to look like today. It's not a big impact because 10 to 15% of our shipments end up in the US, Haas said. ARM's chip technology powers nearly every smartphone in the world, and the UK-based company has attempted to make inroads in data centers and other markets. Shifting trade policies are likely to hurt consumer demand, bringing on a possible decline in the smartphone market this year, according to research firm Counterpoint. Global smartphone shipments rose 1.5% in the calendar first quarter, with Apple, a major ARM customer, front-loading supply to sidestep potential tariffs, data from research firm International Data Corporation showed. The growth rate had been 7.8% for the same period in 2024. Revenue in ARM's royalty segment jumped 30% in the fiscal fourth quarter as higher-end smartphone chips used the company's latest technology, Haas said. However, if consumers become spooked this year and gravitate toward entry-level smartphones, those devices likely will not use ARM's latest offerings, said Ben Baharian, head of technology consultancy Creative Strategies. That makes sense. Okay. The company's chip architecture competes against Intel and AMD's long-standing x86 stronghold in the server central processor market, a booming area in the AI market where central processing units are used alongside advanced GPUs in modern data centers. Yeah. Okay. Great. Any other questions, comments? Please request to speak. Let's see. Any Tesla news? Apple is developing specialized chips for glass AI service. Trump is telling people to buy stocks. Canadian police force are accelerating their shift to EVs. Okay. Some Starlink news. Britain's car industry will see US tariffs immediately slashed to 10% from 27.5%, while levies on steel and aluminum will be reduced to zero. The British government said on Thursday as part of the economic deal with the US. We can read that article later if we have time. Tesla told us on their Q earnings call that they had a record number of test drives globally in Q1. Now in Q2, Tesla Australia says they just set a new record high last week for number of test drives. The question is how many of these test drives are coming into orders, Sawyer says. Tesla's director of battery technology and powertrain architecture, Vinay Mehta, is leaving the company after 18 years. He joined Tesla in 2007. Um, the Patent and Trademark Office has refused Tesla's attempt to trademark the term robotaxi in reference to its vehicles, according to a new filing. Another application by Tesla to trademark the term robotaxi for its upcoming ride-hailing service is still under examination by the office. The USPTO issued a non-final office action on the robotaxi trademark application, which means Tesla has 3 months to file a response, or the office will abandon the application. Yeah, who knows? Maybe Tesla will use this as an excuse to delay the launch. Tesla canceled Cybertruck range extender. We're no longer planning to sell the range extender for the Cybertruck. As a result, we will be refunding your deposit in full. Ford hiked prices, as we discussed yesterday. Anything else? I think that's about it on that front. I think we got the gist of the US UK deal. And I see we don't have any questions, comments. So we're going to end this space. Thank you very much, everybody. And I'll chat with you all next time. Take care.